Okay, welcome back. We're about to go through and place our very first trade, right? Today marks the day you become a professional trader. So here we go. You want to have 4 tabs open along the top here. Have your trading view. You can actually download, there is a trading view app. If you prefer, I actually prefer the app so we don't get as much tabs and junk and stuff along the top. So you can go ahead and it's tradingview.com/desktop and you'll download the app. But for this sake, we're just going to stick with the tabs. And this is all within Google Chrome still, right? So TradingView, we've got our list of symbols here is the first one. Next, we have our swing setup checklist. This is what we're going to go through and obviously find a solid setup. We're going to use this as our strategy checklist. Next, we've got our brokerage here where we can execute trades within. We'll show you how to do that. It's the point of this part of the lesson. And then we've got our position size calculator. Actually, I'm going to put them around the other way. There we go. So we position size and then we execute here. So this is like idea creation or idea generation watch list. We search the charts to see what we find. We double check, triple check on our checklist that it is a valid setup. And then we position size, get ready to take the position, and then we execute over here. So A, B, C, D kind of setup. Right, now let's fly through. What do we need to be doing? So what is this first of all? Run, pullback, run. This is a low, this is a high, this is a low, this is a high. So this is an uptrend, right? Now this trend kind of broke and looks like it might be forming a downtrend now because this is now broken recent lows. This low here, see this is a lower low because that was the previous low. Now this is a lower low. So what does that mean? Price is pulling back here. We're expecting it to probably pull back over the next week or so, maybe reach the daily 50 EMA zone, and we can only take short entries on this one, right? Because the 50 EMA is above price, we can only take short entries. Let's go back to that. So condition, we can only trade trending markets, right? But this is the one I was referring to. In a long trade, the 50 EMA must be below price. In a short trade, 50 EMA must be above price. So in short, we'll only ever trade away with the strategy with power trends. Reversals is different, which you'll learn later. But we only ever trade away from the red line, away from the 50 EMA. We never trade towards the 50 EMA, right? So that leaves us the only direction that we can trade, because the 50 EMA is up here, is down, right? So would we take a down position here? No, because we want to sell at the top and buy at the bottom, right? We're already through the run. Like, which phase are we in is the next criteria. So we've got condition. Is it oscillating? Yes, I'd say it is. It's not choppy. It's not random. So he's looking pretty clean. We identified the highs and the lows. Now phase, sell on the runs, buy on the pullbacks, inverted in a downtrend, right? So has price sufficiently pulled back, or is it mid-run, right? Run, pullback. We want to sell at the end of the pullback. We want to be entering somewhere around here. We don't want to be entering because sell. If we take a short entry here, selling is short, right? You don't actually need to be holding it to sell it, but that's just, it's just down. It's down. It's moved so far down already. Any day now, this is due for a pullback. We don't want to be trading down when it's already oversold in a way, right? We want to wait for that pullback to get in at a good price. So it doesn't make sense, right? So that criteria, that second criteria, is not met, and then we move on to the next one. Pretty simple, right? So what you can do when you're in here, you can press the space bar, and that'll move you down to the next currency pair, right? So what have we got here? We've got the 50 EMA, the red line here, which we're only trading away from. Cool, we like that, right? Now, what is the market condition here? Run, pullback, run, pullback, run, pullback, run, lower low, right? It's a lower low, and it looks like it's potentially forming a lower high here. So the fact that it was forming higher highs and higher lows the whole way, it's now formed a lower low. So the trend, it looks like there is a possible trend change happening. This is beginning a downtrend. Now it's not confirmed until we get a lower high here and price starts moving down again. But in a downtrend, which it's looking like a downtrend, at least it's no longer in an uptrend. It's either indecisive because it's, higher highs and higher lows, but now it's a lower low. There's not congruence there, right? So the trend is saying down. So is it oscillating? Yes, it is. It is oscillating. The phase, the pullback. I mean, it's actually Is it oscillating? It is oscillating, but it's in the wrong direction. We can't be trading in a downtrend. We can't be trading up, right? In a downtrend. We can't be doing that. And also we can't be trading down in the downtrend if the 50 EMA is below us, because we don't want to be trading through that. You can trade towards it, but we never trade through it. And we never even trade in the direction of it, as I've just covered with power trends. With reversals, you'll learn that you can trade from, this would have been a fantastic reversal back down to the 2050 EMA zone. There's a few more indicators and things required for that strategy, but we never trade through it. So we can only trade long here, but we don't trade long. Or so we can only trade up here because trading away from that 50 EMA, but we don't trade up in a downtrend. So we ignore that one. So let's move on. There's only a couple in here. There's only one potential setup that I liked. So this would have been a great setup here. We didn't have deceleration, but you can see where the strategy could have potentially played out, where it was run, pullback, low, high, higher low, higher high, higher low. Even though it was a bit higher, it was a bit higher. We're within that 2050 EMA zone, right? So 2050 EMA zone, and then this one. So it was the makings of a good setup. It just didn't get deceleration. Just these two big candles here. We could have taken that as an up trade, a long trade, but you know, it just didn't present, so we didn't take it. Moving down, the only one that I've really seen here that I've liked, it was one of the pound. So there's nothing here. See, big downwards pressure. This point is where you'd have novice traders jumping in. They're like, wow, it's been going down for so long, it must keep going down. And then they get into a short position. At the same time, it turns around. This is what we call catching a falling knife. You don't want to be trying to catch a falling knife, right? You have no idea where the bottom is, and it could bounce quite aggressively at any time. So carrying on here, this is not a very nice setup. We've got a good support level. So this is what we're talking about, support resistance. So we've got the support level here. If you want to draw in support levels, it's over here. You can see a horizontal line, or on a Mac, it's Option H. That's what I've been using, Option H, and you can draw them in there as well. Moving down, pound yen. So trading away from that 50 EMA, but it's already begun. We're already too far in. So the entry would have happened somewhere around here. Now we're too far in. Very similar to the last setup here. Oh no, not that one. It was pound CAD. Yeah, we're too far into the run. We're too far into the run. Trading off of that candle, that would have been the best. This would have been a fantastic candle to trade off of. If we had that high test candlestick pattern. Run, pullback, run. Complex pullback, but if we call this the high, this the low, this the high, this the low, this the high, you know, it's a downtrend. Got nice deceleration, got a rejection off here, got the high test candle. We could have traded short from there. You'd be running in profit if you'd taken that one. But moving down, I think pound Kiwi was the only one that was possible. Now this is relatively ugly, right? Reason being that the entry should have really happened up here, but it's kind of ran down and pulled back. This is just a period of consolidation. That's what we call it. Price doesn't really know. It hasn't rejected off this level the same way we've just saw with like this one here. That was nice and clean. He zigzagged, it kind of trended its way up, and then it broke down. But once it reached that, it started falling. Cool, we like that. Now, this one here, this meets all criteria. This is where you'd be applying a little bit of discretion. Right? If you were moving, getting a little bit more advanced, this is something I personally would prefer not to take, just because it's run up and it didn't aggressively break against this. This entry would have been fantastic right here off this little candle. You would have banked some profit going short or trading away from that 50 EMA. But then once it's done this and now it's deciding where it's going to go next, you know, this is where you can layer those extra rules or extra confluence factors and say, because it's consolidated sideways for so many days, and you'll get better at identifying these things. Like if it's confusing now, don't worry at all. We'll work through that. But these things here might be a negative. Now, all I want you to focus on when you start trading on the demo account here is, does it meet these 6 criteria? That's what we're going to go through. And if it does, you take the trade. Makes sense, right? So let's see. First one, is the market oscillating, right? This one here is, that was an aggressive rundown. I mean, it was a high, low, lower high. That's pretty much what we've got. This is a very, very big bearish downtrend, beginning of a downtrend. It has broken recent lows. It's certainly not in an uptrend, and it's not ranging or consolidating. It's trending. It's just trending very aggressively. So it's run down, pulled back, ready to start its next leg down, right? So again, the major question is here: is it consolidating? And like this, that's quite a nice range there. So between here and here is range. Consolidating is this. This is not what the periods that we want to be trading. Like a low up here and a high, another low here, a high here, another high, and a low. Like, you know, this kind of junk is not good for trading. Something like this is very nice. This here is very nice. If you're trading reversals, this here is also very nice. The bulls or the bears, one or the other, have control of the market, and we want to be trading with the winning team, right? Right here, is it obvious who's been winning the bear bull fight, right? The bears have been driving pressure down. The bulls have stepped in. They've taken a bit of control of the market, ready for the bears to step in again and drive the sellers to drive pressure down. So all in all, is that oscillating? Yes, I like that. Pound Kiwis up here. So I'll go ahead, make that one green. Now the next critical criteria is phase. We want to sell on the runs, buy on the pullbacks, or invert it in a downtrend. So we want to be selling on that pullback. We want the pull, has price sufficiently pulled back, or is it mid-run, right? Now, has it pulled back? This is the run, this is the pullback. Has it pulled back to a fair price? We don't want to be selling down, we don't want to be going short down here, as I've covered, right? It's pulled back, and I'd say it's sufficiently pulled back. You know, it's about a third, and it's very much, it's already at that 50 EMA, which is great. And this is creating that dynamic resistance that we've spoken about, right? So that's pretty cool. I like that. Yes, it has pulled back. Now over here, support resistance, has it had at least 3 touches? Or has it bounced off a quality SR line within the previous 2 candles? And have those 2 candles, like, is there a resistance line that's had multiple rejections? So if we see, yes, this yesterday's candle, this is today's candle, so we're not actually paying any attention to today's candle. As I covered, that's the one that's still developing. But this full complete candle here has been, it's complete, and that one here rejected that 50 EMA, which we saw rejection here, rejection here, rejection here, rejection here, bounce over here. It's a very good level. But if we were to go ahead and put in another resistance level, now resistance, we want to support or resistance, these are horizontal lines, we want them to include as many wicks as possible while breaking as few bodies as possible. Right now, there's no perfection here. You're not going to be able to draw them in perfectly. Why technical analysis works is because it's what other traders are seeing, right? So it becomes a self-fulfilling prophecy when an obvious line is there. So you don't want to be like cocking your head and squinting your eyes and trying to force something on the charts. You want it to be, if it's obvious to you, it's going to be obvious to every other trader out there, and that's what makes it a solid level. Right, that means that people are going to be trading off of that level, trading towards that level, and that's going to be again a self-fulfilling prophecy. So that's a rejection there. All of those prices being what we call stalling at this level. It's been failing to break that resistance level. When it broke this level, it broke it on the way down. It's rejected again, rejected again. If we go back over here, near rejections, those are very nice. So what we can see here, near rejection, went through some bodies. We might even want to refine it up just a smidge like that and go back and check if it's still valid. Still looks valid to me. You know, it's pretty much bang on that wick there. Bounce, 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 bounce. Everything's good. Everything's looking cool there. Rejection, rejection, looking really good. Very, very, very nice. And you can scroll back as far as you want. You know, quite often I get asked, how far do you go back? It doesn't really matter how far. It's you go back enough to see, like, has it been rejected more times than it's been broken? Like here it broke, here it rejected, here it rejected. I'd consider this one bounce, another bounce, another bounce. This one here would be like a no bounce whatsoever. So this would be 1, 2, -1, and then that'd bring us back up to 2. So out of these 3, it'd kind of have 2 points, right? And then over here, consider that a half a point maybe, so it'd be 2.5, and so on and so forth. So we could see you'd be counting all those ones, and you'll see probably if we counted all of these up, it'd be like, you know, maybe it's broken 5 times and it's been rejected 10 times, right? So that's more than sufficient for a level there. So good, we like that one. We do have our support resistance, so we go ahead and make that green. Now deceleration. Deceleration can either come in the form of a candlestick. Let's have the last 3 candles formed progressively smaller. This confirms deceleration is present. So it can be candles getting ever smaller, or it can be that reversal candlestick pattern which we have seen, the candlestick formation there. So we can see prices run up. We don't have any big candles here, like this was quite a big one, but that was like in the direction, so that was quite nice. But we wouldn't really want to be entering right after this big bullish engulfing on the green candle. We wouldn't want to be entering on this candle. This candle here, one of these two doji candles would have been an excellent entry because we saw massive candle, small candle, smaller candles, very small candle, and then another very small candle. That's very good deceleration. Now down here, we've seen pretty big candle, medium candle, tiny candle, high test candle. These three candles together, that's deceleration enough for me. That's pretty cool. And because that high test at the end of a pullback indicates that price is going to break down, or can suggest that, then great, we can take that one. So deceleration, we have deceleration. Now 50 EMA. Now in a short trade, that's what we're going for. So short is a down trade. In a short trade, the 50 EMA must be above price. Great, 50 EMA is above price. So price is here where we're currently at. That is there. So that is going to protect our stop loss. So there's something called the path of least resistance, right? A price will generally travel in the path of least resistance. So resistance here, right? And we're going to go and put our position in play here. Over here, this little position sizer, you can click here and it's a short position. You can go ahead and star that and that'll pop up on your hotbar up here. If we go ahead and put short position where we're considering setting it up, we're putting it stop loss, as I said, just eyeball it just behind the wick here, and the entry is just below the nose of that candle. And profit target, you can either target recent lows, or you can go no profit target and trail your stop behind. I encourage trailing the stop regardless and securing profit as you go, but sometimes it's nice just to take your 1.5% after this one trade plays out by having a profit target. So that's how we'll position it up. Path of least resistance. So we have this resistance line here, right, which is more often than not, price bounces off it, right? Price bounces off it and then bounces away. If we go back, we see every time that price has bounced off it, it's bounced away. It's come down here, it's bounced off it, and it's bounced away again. So that's what we want. It's come back, it's bounced off it, and now it's bouncing away again, this level. More often than not, the same thing happens with the 50 EMA. So those are two confluence factors that we've stacked together. That is resistance, right? This is the chance that price has to break through more levels. It's kind of like, think of a river. I've got a river out the front of my house here. It will always find the easiest path to the ocean, right? It'll always go the easiest way. From the top of the mountain down to the ocean. It's the same thing with price. More often than not, it's going to be traded off of these levels more than it's going to be traded through these levels. True, eventually they will break. They will always break sometime, but by stacking as many things together as possible, we want to be considering our stop loss almost like our hidden treasure chest. We want to be hiding our stop loss behind as much junk as we possibly can and have as little junk as possible on our way towards our profit target, if that makes sense, right? So that's the setup there. I like that. And then our final, so we've got that we're trading away from the 50 EMA. Yep. And now 2050 EMA zone. Price must have traded somewhere within the 2050 EMA zone within the past 2 days. So we've got that as well. We're well within that 2050 EMA zone on this previous candle. It's the previous two candles. This one also would have been valid, but this one here is great. This actually reached the 50 EMA. We don't always need to reach the 50. Like say taking a short position off here is fine. It can also just trade up within that 2050 EMA zone. It doesn't actually need to reach the red line, just needs to be within that zone. In this case, if it reaches the red line, even better, because then you're confident you've got a fantastic price that you're getting in at. So that's the setup. That's that. I hope that makes sense. I know I've flown through a lot of this quite quickly. Again, these are all things that you're going to learn in time, and of course you can, once you join ProTrader, you get direct access to me, and you can ask questions. And we've got a weekly call that we go through, and we break all this down together as well. There's a lot of traders. We've got a trade ideas channel where we actually post ideas on setups, and we take screenshots and we say this is what we've got our site set on. This is what we're looking at taking today. It's a very, very powerful community to be a part of if you're looking at getting into trading. But for now, this is what we like. We like the setup. This is what we're going to execute on, right? So how does the execution work? Remember, our stop is protected up here and our entry is down here. Why is our entry down here below the nose? We don't take a live entry because what we're saying is this needs to break the low of yesterday's candle and then before we'll take the trade, right? So the likelihood of it breaking yesterday's low and then deciding to turn around, run back up, break the 50 EMA, break the high of yesterday's candle, and then break this resistance line, and then hit our stop loss, the likelihood of that is I mean, it's fairly low. It's more likely that it's just going to keep running down in the direction of the overall trend. And that's the theory of trading, right? It's that path of least resistance, and it's stacking confluence factors. So stacking confluence is what are all the things for the trade and what are all the things against it, right? And all the things that are for the trade is that protection. So we've got a lot of protection to the stop loss. Chances are it's going to reach this level. Cool. So once we've got that, we go over to our position size calculator, right? We've got all of our boxes checked. Happy with that. Position size calculator. We need to know what our currency pair is. We can see it up here. Pound Kiwi, GBP, NZD. Account currency. So account currency is whatever currency that you set your account up in. This is 100,000 US dollars. You can go into your brokerage and you can actually take money out of the account. You can make it only $20,000 just by applying minus 80,000 to the account. Whatever you're comfortable with, whatever's somewhat realistic. You can of course do the math. If you're going to be funding with $1,000 or $10,000, whatever it is, you'll just be able to kind of reverse, just calculate, do the math there, right? If you're only trading $1,000, well, it's just going to be 1/100th. So it doesn't matter if if you want to do that or not. Some people do, but you know. So 100,000 US dollars. We go over here. So it's a US dollar account. If you're a euro account or a pound account, you can go ahead GBP. Just click it in here. Now account size 100,000. Risk ratio 1. It's always 1. So that's how much do we want to risk of our 100,000 US dollar account on this currency pair is 1. And the stop loss in pips. We need to figure out, okay, so what's the distance? So we're figuring out which size position we're going to put on here. How much money are we putting on this trade? And then we want to know the stop loss. So the distance between the entry price and here. Of course, if our stop loss was up here, we'd want we want this distance to be 1% of our account. We'd have to be trading something that's half of the size, instead of putting 10,000 or 50,000 or 100,000 units onto the trade, would want to only be putting in half the amount because it's traveling twice the distance, if that makes sense. So if we go back here, what we do is we double click on this position, and this tells us stop level ticks. Right now, this is where it gets a little bit confusing. Ticks is just -1. If it's always ticks, so pips is 10% of this, right? So we kind of drop the 0. So it is 200 and oops, hang on. Here we go. It's 211 pips. I know it's a little bit funny, right? But just because it shows you in ticks, there's no way to actually change this to pips because you've got a pipette. So it's 211 pips and 2 pipettes, which pipettes can also be called ticks. So 2,112 ticks. Anyway, you get the point, right? I'm not too sure how you can remember to write that down. Just write it down. Well, I'll show you a way how we can actually check all of this at the end once we've placed the order, just to make sure that it is all valid. So anyway, just take my word for it. It's 211. So jump over here. Stop loss 211. Ignore that, never change that trade size lots. That'll just vary sometimes if you're trading non-Forex. But for the sake of this education, we're just doing Forex. So we go calculate. Now units, right, and sizing. So this means that we need to trade. So what we're risking is 1,000 US dollars. Perfect, that's 1%. And this means that we need to trade 0.73 lots. Right, bit of an arbitrary number, doesn't really matter at this stage, but everything's measured in lots. We cover that more in the curriculum. So 0.73. So now we jump over to our trader, right? Now we need to go and find our pound Kiwi, which most of it's in alphabetical order. So if we go pound NZD, you don't need to worry about the .r or any, it's just because it's raw. Anything that's dot afterwards, just ignore. So it's pound Kiwi. Now we go, you can right click, go chart window, if you want to bring up the chart window. And then you can right click anywhere in the chart and go trading, and you go new order, right? So new order. Now the volume is the lots. So how much do we want to trade? I've already copied, maybe he's not letting me copy it. So 0.73 lots. So we go 0.73, right? Stop loss is what we've got over here. So stop loss, we want to copy that. Let's see if I can copy this. Maybe the web trader doesn't allow that. Oh, I guess it did work. It's just a little bit slow. Now the take profit, no, that didn't work. 193390. Oops. Oh, well, there you go. 193390. There, if you download the actual application, it allows you to copy and paste. Now take profit. We want 1.88094. I encourage you have a piece of paper, pen and pad, and actually write this down before executing. So you put in your entry or your entry price, stop loss, and so on. So take profit. This might actually wipe, I remember now. Profit, so we go 1.88094. 1.88094. Now there is this box here, market execution. Market execution is a live entry. If we were to click this, we'd be live in the position now. We don't want that, right? Why? Because we want it to trigger us in when we break the low of this, and we're swing trading here, right? We don't want to be in front of the charts all day sitting there waiting for that perfect entry just to click the button. Bugger that, right? I don't want to be on the charts more than 2-3 hours a day. That's not my style, right? Day traders, yes, live executions more common, but as for swing trading, we don't need to worry about that. Even when I day trade, often that's all I do. I only really day trade these days, but even then I'm 50-50 on live entries. And I still don't really spend more than 3 hours a day on the charts. So jumping back over to this here, we want to, rather than type market execution, we want to do something what's called a pending order. Right, now I believe when I click this, it's going to wipe the above. Oh no, it didn't. I've updated that. Very good. So we want pending order, and this is called this is going to get a little bit confusing for you, right? It's going to be a sell stop. Now it's different than a stop loss. Don't worry about stop loss. Sell stop. We're not using any limits. Ignore limit. It's always stop, buy stop or sell stop, right? It means that I'll give you a brief explanation of the difference. Not that it really matters too much. So if you want to ignore me for the next 60 seconds, you're welcome to, but just for future reference, because day traders do use buy and sell limits sometimes, is the sell stop is if price is here and it's going down, it wants, and it's a short entry, you want to enter short, right? And price shopping around here, which is exactly what we've got in our setup. As it runs down through that, you want it to trigger you in as it blasts through your entry. Triggers you in on the way down. Right, now a sell limit is we want it that it has to be below the price, right? The price has to be below your entry. So it's what you're telling with a sell limit is if price pulls back to this level, then I'm willing to buy in and I'll go short then. So it's just kind of depends on which side. Now the most important word here is sell. Sell means short. If you try to do a sell limit, it'll just say it doesn't make sense because the sell limit and the sell stop are on different sides, right? So if you were to try to do sell limit and then put in the entry price, it's just not going to work. It'll just give you an error. So there's no way you can actually mess it up. I know it's a little bit confusing. And buy is obviously the opposite of those ones. Buy limit is prices up here. It's if it pulls back to a certain price, then it will trigger you in, and then you'll hope that it will go up, right? It's more day trading style. Whereas a buy stop is if price blasts through this level, trigger me in, and then we'll keep riding it up. So we've got that confirmation of momentum. So anyway, sell stop, and we want to double click in here, and then entry price. So 1.91278. 91278. Cool, so now we go and double check all those. You can take a moment. Entry price, profit, stop. And then we go check them. Stop, take profit, entry price. That all looks good to me. Now the expiry, I like to put this one at about 6 hours, or you can put it for 24 hours from today, or you can manually remove it, depending how consistent you are getting on the charts. I encourage you look at the charts every day. Of course, life does get in the way sometimes, but if you can get on the charts every single day for 30 days, and you know that you're going to be on the charts the same time every day, you don't necessarily need to put an expiry in there. If you are going to place an order and then not look at the charts for a week, just go ahead and put it on for the next day. So for this one, we'll just put it the 30th. And then you go place. There we go. So now that that's in, I'd say go ahead and change this chart to daily. Again, we don't really look at anything on this chart. We don't really care what's going on this chart. But what we want to be paying attention to is, does this look right? Right. So the first thing is, does this look right? I know it's probably, if you've not looked at these charts before, it's probably pretty confusing. I've just changed that up there to daily, so it mirrors, or it should match loosely, what's going on over here. Now we can see here, just looking at the candlestick pattern, how we've got like this little high test candle here rejecting the 50 EMA, kind of high test. Go over here, we can see that's that high test. So that's the candle that we have straddled. You can use this, you can zoom in. How do we do this? Mongrel, there we go like that. I believe, yeah, there's some limited functionality on this. We can't actually make it too much bigger from what I can understand. So this is why we don't use this one. Like we can't even make these taller like we did over here. So anyway, I like it taller, but if we were to make this one skinny like the other one, we can see our stop loss behind the wick of that candle, entry just below the nose of that candle. So jumping back over here, stop loss above there, nose below there. Basically, if these numbers here are accurate, then you're good, right? Got your price, that's your entry price, stop loss price, take profit price. And I don't know why they designed it that way, but there's also another price. This is current price. That's entry order price. If you ever want to change any of these, you can just double click in here, and then you can go ahead and modify with whatever it is that you desire with. Here we go. So that's that entry. Now the final thing that we want to do to check that we have position sized correctly is, if we click on this, if you just click and hold on there for a second, you can see what are we risking here. Just above my cursor, it's 100. I'm actually moving it slightly. If I do move it a reasonable amount, this window will come up and it will say, do you want to, basically is asking, do you want to enable and give permission that if I click and drag something without confirmation, for us to edit this? It's called one-click trading. Don't enable one-click trading. It's incredibly dangerous. So go cancel on that. And then the next time you go to move it, it'll actually bring up the real window, which is what we want, right? And then we close it. We don't want to change it. But we can see if we just grab a hold of this, give it a little wiggle, we'll see that it is floating around that 1,000 US dollar mark, which, what is that on a 100K account? It's 1%. Perfect. So we have, so we've position sized correctly, and everything's good. Now we can go to the beach, go to work, do whatever it is that we need to do from here. That is the entire process for placing a trade. So there you have it. That's the entire, from start to finish, how you set up your systems, how you place a trade. This is what I did for years. Every morning, going in, scouring that watch list. Of course, you get better at it, you get faster, and really, I'd only be on the charts maybe 20 minutes a day, and depending how many setups there are, there's, generally I trade between 8 to 12 trades per month. And yeah, that's pretty much it. I don't know what more there is to say. That's the broad overview. Of course, there is a lot more depth to each of the elements of trading, which that's what you're going to learn in Pro Trader in our core curriculum. However, for now, you have all the tools required to go and start placing your trades. Your assignment is to go, if you haven't done it yet, is to go set up your trading view, right? Play around on the charts there. It's going to be a little bit weird navigating for a little while, but you'll get used to it. And then your swing setup checklist, if you haven't got that, go get that. And then you've got your position sizer with my FX book, and then your brokerage, your demo account. I encourage you to just take massive action. I know it's so easy to go and watch a video and think, oh, I'll get around to it. I'll get around to it next week. Because let's be honest, setting up brokerages and setting up this crap is not the fun part, right? And the actual trading can be quite fun. And swing trading as well in itself can also be not super exciting. But if this is a career that you're in pursuit of, start taking action today. Do those baby steps to get you there. And, there's a reason why the top traders in the world and why, incredible traders are highly sought after. It's because most people are not willing to have the discipline and the fortitude to actually go and do what is required. But overall, it's not hard. It just requires a little bit of discipline. You have the discipline, you'll be in the same league as an A-list celebrity, as a sports athlete, right? As an actor or actress. Like there is few industries that pay as much as professional trading does. No matter how much money you have in your bank account now, right? There's there's a tremendous amount of opportunity out there, especially today with the likes of prop firms, which is exactly what we're going to be covering in the next lesson, which is what we call here is turning $2,000 into a $4,000 monthly income. Now that you know the theory behind trading and kind of know the actions and how it goes, now from here, how do we make this a full-time career and making $4,000 plus per month? And that's only step one. A good trader, a solid trader makes certainly more than that. And I've consistently been making more than that, especially if you've got a 200, 300K account secured from a prop firm. So that's what we're going to cover in the next section. Hope this was valuable. Go back, rewatch it as many times as you need to. Again, this is your future that we're talking about, right? It's up to you to take the actions. On that note, I'll speak to you in the next video. Bye for now.